And welcome out, everybody, to today's halftime report. My name is Coach M. We've got Coach Matt. Hope all of you guys are doing well today. The market is doing great. We are at all-time highs again, Matt. What do you think about that?
Should we celebrate? I kind of feel like we get a lot of all-time highs over the last 10 years. It's like there's
Well,
times we get like 45 of them in a year. But congratulations, yet again, another high, and the markets are navigating breakouts. I think I'm doing better than the market is today, though.
we need to celebrate. It's November. It's my birthday month. Markets are high. Let's just
Wait a
celebrate. Let's
sec.
do a
Hold on. Hold
celebration
on.
month.
Hold on.
It
Wait a
is a
second.
celebration month.
I I get a birthday minute. Like that's what I get. Okay. I got friends that have birthdays, right? They have birthdays, and I know
Uh-huh.
I have other friends that have birth weeks, right? We're going out to birth months. This is my
Yeah, we're going
birth
my
month.
birthday month. It is the entire
You know how
month.
these trends happen with inflation, Emily? Their birth year, right? At some point, it's just okay. Let's
But
celebrate the birth month of Emily. I love this.
in any case, welcome out, everybody. Hope you guys are enjoying the show. We've got a lot to go over today. It is still earnings season, so we're going to have a round of a session of earnings roundup. We're going to go through Queen's Court. We're going to talk about the FOMC preview tomorrow, Elon Street. We got a lot to get to, but let's do what we always do and start with our market skyline. Matt, give me a read on what you're seeing in the S&P.
Yeah, let's take a quick read of the S&P from a technical perspective on this Tuesday, looking at a little bit of a continuation of the recent breakout from last Friday. You got this as a little bit of a high base. You see the 9 EMA catch up a little bit. You see the breakout on Friday, a little bit of hesitation on Monday, follow through here on a Tuesday. And I don't think the storyline is very tough to read on this one. If you just go to look at your top 20 stocks on earnings today, you're going to see a lot of firing off responses. It's been a little bit of a positive. I don't even want to say little bit. It's been a major catalyst regarding earnings over the course of the last 3 weeks. That is the storyline here again today. And I said this in the podcast, Emily. Another edition of the Trade Justice podcast was released last night with Coach Mark and myself, and he asked me a question pertaining to this topic of what's important this week in the market, right? And he said, Matt, you got all these geopolitical situations, you got the G20, you got the Fed tomorrow. And I think he was thinking I was going to go off on the Fed. I'm like, I don't even care about the Fed tomorrow. I really don't. The Fed is going to come. They're going to do what they do, and they've lost my they've lost my desire to track them as closely. So they are just an afterthought to me. And that's amazing to me that they are truly an afterthought, but they are. Even in a day where they're most likely going to announce tapering, I mean, it's like you punted too far. It's like you got to make a choice at this point. So just make the choice you have to make. Inflation's skyrocketing. What else are you going to do? At a minimum, stop promoting inflation. Let's start there, Fed. At a minimum, just stop producing inflation with pumping $120 billion of fresh QE to the New York banks when the New York banks have even said for months and months and months, we don't even want your money. So at a minimum, Fed, thank you for finally making the decision to pull the money that is not needed, that has an inflationary problem. So I do appreciate that. I do look forward to the conclusion of the word transitory. I think it's going to be erased from the English language tomorrow with the Fed trying to do their best job in moving away from transitory language. See, Emily's getting to the point where like I now understand what Tim goes through all the time. But when you're looking at that, you got so much this week. But the answer was simple. This storyline over the last 2.5 weeks isn't an infrastructure storyline. It's not a geopolitical storyline. This has been an earnings storyline. And so this week, when you're talking about all these other situations, this is earnings today. You're seeing a lot of positive responses to some positive earnings reports. For example, let's talk about real estate for a second. As you're fighting up against this breakout channel against the all-time high, well, two major components reported in the real estate space today. Public Storage came out, and I'll go through their raw numbers here in a second, but they had a hat trick, a beat, and an increase in guidance. Then you had Simon Property Group come out and say, well, you know what, PSA, you did good, but we're going to do one better than you guys. We're going to beat and do a bigger increase in guidance. And so you see the gap in the run a little bit, and yeah, they have moved a little bit more than, say, a trader is looking for right now. But that's the storyline that's happening here today. When you take a look at healthcare, right now, the storyline isn't, oh, what did Biden say at the COP26 meeting today on methane gases? The storyline, quite frankly, is, and it has been from Johnson & Johnson till today, and the follow through and the outperformance today is very easily understood when you're looking at McKinsey. MCK, a major component in healthcare, reports earnings today, and McKinsey came out with absolutely a rock star report, just an absolute rock star report. And yet again, in a healthcare space that was identified after Johnson & Johnson, that there was a thirst for this area of the market. You've seen healthcare solidify itself in that time frame. And yet again, here today, what's the storyline in healthcare? Is McKinsey coming out with 615 EPS versus the expectation of 467? They came in with, think about this number. These are like Apple territory, $66.3 billion in revenue. The expectation was $63 billion. They net positive $3 billion. They also increased guidance. And so to me, we as traders we can be the squirrel chasing the nut sometimes with all of these big picture stories, right? We get fascinated the same way everybody in society gets fascinated with these big macro political, economic storylines. We geek out on those conversations, but the simple reality, the story of the market cannot be told accurately in the last 3 weeks without earnings, and it can be told accurately without any of that other stuff that is out there right now. Earnings have been a very positive catalyst for the market. It's been a little bit of a catalyst to spark that buyer's type belief in Santa Claus coming to town a little bit. The question for me is, as we're navigating a lot of the all-time high breakouts in the market, and when you're tracking the sectors as well, and the only question to me is can this continue as we come into November? Can the momentum continue in November that we had built in October? And so far, so good.
Absolutely. I agree with you on all that. So give me a read on the Dow Jones, and then let's go through the Russell and NASDAQ.
I like the Dow here. I like the Dow here. You're seeing a little bit of a firing off response. You're seeing outperformance in the Dow Jones here today. And again, when you're looking at the Dow Jones, you're talking healthcare stocks, you're talking industrial stocks, you're talking financial stocks. All of those sectors, and especially healthcare, doing its best job to catch up to the price action that has been happening in finance. And when you look at finance here today, I think you got to be impressed with a couple things. Number one, the 90 MA holding very firm over the last 3-4 days, holding the high base channel in finance. And then the one trade we've been all kind of just waiting, and patience is paying off here. The Goldman Sachs breakout here is legitimate. Can we see some follow through? Obviously, we're testing on the intraday highs here today. We're breaking out of that 420 level. A close above 420 should see a little bit of additional price appreciation, but this just isn't just a daily storyline here. Look at that weekly channel. You see the breakout after the little bit of hesitation. And so you're looking at a Dow Jones where you're dealing with a lot of sectors that are quickly improving. And specifically when you're looking at the industrial components here today, XLI, very similar to finance. It hasn't been trending and performing as good as finance, finance is one of the highest rated sectors at tackle trading. But when you're looking at industrial right now, you're looking at a pattern that's really holding that 90 MA. And then just today, again, listen, I know I'm the earnings guy right now, and I'm living in corporations' heads. I'm living in their heads right now. They might be impacting my way of thinking a little bit. I've read too many earnings reports. But again, when you're looking at this, you're seeing it the underneath the sector here. Look at old Rockwell here, firing off a positive earnings response. Specialty industrial machinery company. When you're looking at ETN here, firing off. Now, what happened in these two companies that is really kind of propelling a little bit of that positive mentality that's happening in the industrials? Well, again, you're talking about companies that both had either affirmed or increases in guidance here. And so you're seeing earnings really play out and the Dow Jones with, and again, you're talking those three sectors, finance, you're talking healthcare, you're talking industrial, you're talking cyclical areas. When those solidify themselves from a sector perspective, Dow typically has a little bit of a lift off. I like what's happening with the breakout, and it's a no sell day so far here today. And now you're going to kiss up against a resistance channel, which is all made up at this point. It's hypothetical, but it's a significant whole number, 36,000. That's kind of right in line with that intraday high there. So another breakout yesterday, a little bit of an additional confirmation here today. When you're looking at the NASDAQ, it's on a freight train. Like it's on a freight train. Like what, nothing's stopping it. Like it just made. It's like we're on the train, we're going to a destination. Don't bother us until we want to slow down. And I think that's the way to approach this is don't bother it until it wants to slow down. It just keeps inching up. And when you're looking at the actual technology sector, you see that breakout from last week, the continuation, resetting that high base. I do feel this is fairly important. Resetting that high base right here kind of resets the ability for the market to move higher. Instead of coming from support at 150, you're now coming from support at 157. That resets that stairs, and so you're not walking from 150, you're walking from 157, and so you still got some legs here to run in the tech space. And so obviously nice little outperformance day in the tech space, but the index that you just gotta be tracking, you know this as well as I do, is that breakout on the Russell 2000. We had a no sell day yesterday. No sell, no sell. Who's the coward that sold the tick at the top? No sell day on the Russell 2000 here. You broke out at 2,300. It blasted off, coming smack dab into those old resistance. A little bit of hesitation here. That's all we're asking. That's all we're asking. A little bit of hesitation here. Then we might see a little bit of a lift off as we break through that ultimate resistance channel. But you got to like the price action in the Russell 2000, and you got to, and obviously resistance is resistance until it's broken. But I'll just call it this is the best opportunity the Russell has had to break out in the last 8 months from a technical perspective, from a market environment perspective, from a seasonality. If Santa Claus can't break the Russell out of his slumber, nothing can. Absolutely nothing can.
Absolutely. And it's got a lot of catch up to play to the other indexes. And when Russell breaks out, it moves. So, once it does, it's going to be, if you go back to, last year, how it just ripped,
Well, we got to go back to the weekly chart to check that out. But again,
look at that, right?
Look at that weekly breakout there. After the recovery, look at the channel. Boom, 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 boom. Can it do that type of number? Well, if it does that type of number, we might be talking about high rates of inflation here in the short term, not long term. But yes, I do agree, and I think we're all excited for that opportunity. But the question I have for you, Em, you're a cash flow condor, darling. You love cash flow condors. It's one of your core systems out there. The bear call side of that equation is threatened right now, right?
Yep.
You're most likely not at your top end of your strike price, but we all know decisions have to be made in front of the strike price.
Oh yeah.
Right? In front of the strike price. Is this, and again, we have yet to break out of that top band, and that top band has been a very powerful resistance level. But I will maintain this is the best opportunity the Russell has had, and in the best technical condition the Russell has had as it is fighting through that breakout. At what point would you either pull the bear call spread from the equation, because the bull put side is probably getting pulled because of net liquidation. So at what point would you pull the bear call based on price action? Or adjust it, or kind of walk me through your decision-making process there.
Yeah, so I usually have alerts underneath where my short strike is. Usually I'll do like maybe 1 or 2 ATRs just so I can be aware that, the bird's starting to rattle the cage a little bit and it's trying to get out of the cage, right? So if I don't plan on hedging, I'll have, I'll have a stop loss and I'll get out once it touches my short strike and I'm done. Game's over, right? However, just kind of seeing what the Russell has been doing over these last few months, just sideways, just itching to break out. I'm now looking to getting, into IWM as a form to hedge, but also just to be bullish in the Russell 2000.
Yeah.
So I have, a trigger to get in. Actually, I think I did get triggered in once the Russell broke, not the Russell, but yeah, once IWM broke 230. I have a bull call as a hedge and also as just a bullish play. So if I get triggered out of the condor, fine, I take my loss, but now I have, a bull call on IWM to kind of offset those losses that I'm going to have on the bear call side.
So you're doing the same technique that a lot of other traders do. They do it with equity, right? They'll go buy a few shares of IWM to offset the potential risk on the bear call side of the equation. Yep. You're saying, let me just roll that into a bull call, take the directional risk, and that will mitigate the bear call side of the equation, correct?
Exactly. Yep.
Yeah. So basically, you're basically on this side of the equation. You're basically saying, let me go to delta neutral on that. Let me just wipe out the risk type scenario. I think that's an appropriate response here. On the bear call side of it, the one thing you never want to do is take max loss, right? Because that'll wipe out months of cash flow. Right, months of cash flow.
Wipe out everything. You wipe out the last 10 months you've had of positive cash flow.
You can't.
You let that bird out of the cage, you are done.
And honestly, and that's the drawback of credit spreads is they can be very consistent for 8 to 9 months, but if you mismanage one, it can wipe out 8 to 9 months. That's what you get for 80 to 90% probability. There's always a yin and yang between reward and risk and probability analysis, right? Always in every trade, in every system out there. I do agree with you though, Em. I do think it's management decision time on the Russell 2000, despite the fact that it hasn't broken out yet. Because
you've got to have the plan. You've got to plan ahead. You can't wait until you're seeing those massive losses to have a plan. You've got to prepare ahead of time. Absolutely.
Well, and all it takes is one candle on a breakout of 2360 and drive it to 2400. The same thing that happened yesterday when it broke out at 2300 and it drove to 2360. The same thing can occur here. So I do think you got to be ahead of the curve a little bit. And I do like at a minimum a little bit of rolling up and out on that bear call spread. But I'm perfectly fine with going delta neutral, either pulling the bear call side of the equation, opening up that risk wrap, because again, we'll have Coach Tyler on tomorrow and you'll see how happy he is based on what the Russell 2000 is. We all know what his portfolio is dominated in.
We do.
But I guarantee he's going to be looking at this as directional. And that's why we're talking about it as adjustment to cash flow.
Yeah, and the other thing, when you look at it big picture-wise, Matt, right? It's not like your whole entire portfolio has just been, built on Iron Condor. So even though you take a slight loss on the Condor itself, hopefully the rest of your portfolio has been bullish, and you're going to offset those losses that you're going to experience this one time, this month, on the Condor. Hopefully everything else has been making you money, and you can just offset that. But yeah, it's all about managing and just making sure that you don't give up those profits that you've done over the last 10 months. That's the key thing, is that 10% that you got to go to work and manage that trade. That's the most important part. It's not the 90% probability of you cash flowing. It's that 10% that you got to go in and actually work. You actually have to go work.
Well, and here's a simple reality. The last time we saw the Russell 2000 break out and cash flow condors get absolutely destroyed was right here on that breakout. And yet, Emily, that was probably one of the best short-term trading environments the market has enjoyed in years and years and years. And the money that was made in that short-term trend was to the tune of billions upon billions upon billions of dollars to market participants. And so, yeah, the 1 month it breaks out and it blasts that bear call, just typically have perspective given the fact that there's a lot of other things in that portfolio that do really good in that environment. So, yeah, I like the Russell 2000's chance to break that upper band here, Emily. It looks like it certainly wanted the top end of the band. It got it. Feels to me like it wants to break out. Just let's see if we hesitate a little bit. I'll tell you what Frank would call for. He'll be with us on Friday. He'd be, give me an inside candle. Give me another inside candle tomorrow.
Yep.
Let's go with another inside candle on Thursday. And you know what? Just give me one more inside candle on Friday so I can trigger on next Monday. I doubt he's going to get what he's asking for, but again, wouldn't surprise me to see a little hesitation on the Russell 2000 as we navigate this all-time breakout channel on the Russell.
Absolutely. All right, so let's get into commodities here. And while we're in commodities, let's also talk about the infrastructure here that we've got going on with all the news that's happening this week. I guess we can talk about that too when we talk about the FOMC meeting later on. But give me a read on crude oil, and then let's take a look at gold and Bitcoin.
Yeah, very quickly on the infrastructure, just to kind of by way of announcement, this is a yin and yang of politics 101, but you want to make sure you know where we're at in that cycle. It does seemingly feel like there is some agreement on both the social safety net 1.75 to 1.9 trillion dollar plan, as well as the traditional infrastructure plan. However, Senator Manchin did say, and coming out of the weekend, like everybody was roses, like, yeah, we're good, we're good, we're good, we're good, we're good. Coming out of the weekend, though, Senator Manchin did throw a little bit of cold water on those proposals because the progressive Democrats will not vote for the traditional infrastructure without a vote on the social safety plan as well. Senator Manchin simply said, and I know he's getting roasted a little bit here today, but fundamentally, I don't know if I disagree with what he said. He did say that he wants more clarity on the economic impact of the amount of money we are proposing to put into the economy. And in an environment where inflation has been ticking up, I think that's an appropriate question. And what I feel that is actually happening is everybody's kind of waiting on the CBO. And the Congressional Budget Office has not scored the plan yet, and so I think that's what a little bit of the hesitation is about, is to see where the CBO comes in on the economic plan and how that would impact not necessarily inflation, but from an economic growth impact as well as a debt perspective. And so there's a little bit of a wait and see. There's a little bit of cold water on those two plans. Still, we're going through Democratic infighting to a certain extent. But I still maintain that I think these plans do eventually get done. It's just a matter of crossing those T's and dotting those I's. And when you're doing that, you think about this as a business deal. If this was a business deal, all of these negotiations would be done in private. Nobody would be familiar with them. And then they would simply announce the deal after the conclusion of the negotiations, correct? But in politics, these big time negotiations, and this is a $1.75 trillion deal here. This is the largest in American history to a certain extent from an infrastructure perspective. When you combine both of these two plans, they dwarf what we were doing. They don't dwarf what we were doing during the pandemic, but they do dwarf what we did in 2008 and 2009 during the subprime market crisis. Well, I think it's okay to make sure that you're comfortable with this type of thing. And so we're just kind of waiting on the CBO, and we're just waiting on the conclusions of those, but it does look like they will eventually get done.
Yeah. Yep.
Now, more fascinating topic to me is the breakout of 85 on crude oil, though.
Hello.
We can all geek out on that. Tim asked me a question earlier today. We were in the pre-production show, and he's like, is that a slowing momentum? Is that a shift in trend yet? And the answer is yes and no. Absolutely, we are seeing slowing momentum on crude oil right here. Is it a shift in trend? However, I don't know yet. It really depends on the next few days as we navigate 85. If you see a little bit of a short-term double top where 85 holds, pivot confirmed back down to the 81 level, you could definitely see a little bit of a short-term reversal in that scenario if it plays out that. But there's a short time period in between continuation and reversal analysis, and you're kind of splitting hairs there to a certain extent But I got this as continuation analysis. I don't see pivot confirmations yet. I truly just see a little bit of a downward drift coming into the 20-day moving average, and we've fought back up into 85. I got this as short-term consolidation, which means to me right now, it's simply a subtle shift in momentum. And so at that point, and when you do see that subtle shift in momentum, you're looking for the breakout. And when I said to Tim, when we were debating it a little bit, we weren't debating, we were just discussing. But as we were discussing it, I said, all the slowing momentum is just the indication that we should slow down with it. When should we get back in? Well, once the momentum shifts and it breaks back out. And so when you see the slowing momentum, it's just an indication that, take a day off, go on vacation, hang out, go party, call long lost friends, do whatever you would do. Do anything besides go to Metaverse Facebook. Anything other than that, everybody's good. When it breaks out, let's go. It's ready to rock and roll party again.
Yeah. Go check out XLRE and see what you can find there while you wait for oil to break out. Go put your money somewhere else for a little bit.
There is not a shortage of good trades out there. So no, it is see a trade, you take the trade.
Absolutely. All right. What do you got on gold for me?
Gold, you know what? Gold is doing its best, stuck in the mud, nothingness, forget about me, and come back when you break out and it's up 3%. It's just, it cannot find its footing. It cannot find any consistency in the price action. And over the course of the last 3 to 4 weeks, and I'll just ask Team Tackle this, you guys have been here every day tracking what we do or as we analyze the markets. And I've been saying this for a month now. This market is extremely technical. It is extremely consistent from a technical perspective, from the drops in price to the double bottom analysis, to the breakout, to the secondary patterns. It's been a very consistent bear market, reversal, recovery. It's been very consistent technically. You know what has not been consistent at all? Gold. It's been all over the place. And so it's been a very difficult read in the gold. GDX is kind of the preferred metric for a lot of us at Tackle Trading right now, as it has done more of the cash flow side of the equation. But that bullish retracement is no longer a bullish retracement any longer. It is now back into this volatile craziness of nothingness. And so to me, gold's just in one of those environments where it's kind of a stay away until gold clears up that picture for us.
I gotcha. All right, give me a quick read on the dollar, and then I want to end with Bitcoin because I want you to talk about the podcast that you guys did yesterday. So give me a read on the dollar, then we get on Bitcoin.
The read on the dollar is neutrality until the Fed tomorrow. I mean, and we all know the number one movements with Fed monetary policy is currency first, commodities second, equities third. All the storylines are written about the equity market, right? But the real impact is done in the currency market, and so we'll definitely have some a little bit more detailed analysis post-Fed on the dollar. We'll take a look at some of those cross pairs. But in terms of UUP, we're really just looking at some volatility, some inconsistency in price action, trying to find its footing after a little bit of a breakdown from last week. But I got this in the neutrality range, fired back on Friday last week, kind of put that back up into some degree of neutral range, maybe even slightly bullish coming into the central bank tomorrow. But for the most part, this is just kind of neutral between 25, really at 25 and 25.40 level.
Awesome, great.
Now,
all right.
Bitcoin.
Yesterday, you guys did episode 449 of the Trading Justice podcast, and you guys were talking about Bitcoin.
That's right. People seem to enjoy it.
Bitcoin, and then tell me what that podcast was all about yesterday.
Well, I mean, the podcast came out, Bitcoin went up and had secondary confirmation. You put those two together. I'm not tying them together. I'm just saying you put those two together. But no, I digest. I had the pleasure of having Coach Mark on to the Trading Justice podcast yesterday, and he wrote a absolutely just gangbuster of a newsletter for the Trading Justice podcast, and I'll get that. Let me get that link very quickly. The newsletter, and then there we go. There's the newsletter. He wrote a newsletter yesterday on Bitcoin proxies, and I just felt like he did a masterful job of, and what he said in the podcast said, Matt, I tried to write to me a year ago, because Mark was not an early adopter in Bitcoin.
No,
Mark
he.
was not at all. Like if you want to say early adopters, those were 2013, 14, 15. Once the institutional argument started happening, that Bitcoin phase started taking on a mind of his own. And that's when Coach Mark came into Bitcoin and his appreciation for all things Bitcoin asset classes. And so about a year ago, Mark went from not having an understanding of Bitcoin to really making it part of his investment strategies. It's part of his core philosophy in trading and investing. And I just felt like he did such a wonderful job of detailing what a Bitcoin proxy is, kind of detailing the benefits of the different Bitcoin proxies, talked
Mhm.
about the ETFs, he went into the different miners. And you know what? Whereas, Mark came into Bitcoin in 2020, my first purchase of Bitcoin was actually done in, I believe, November of 2013 is
Mhm.
when the first time I used Bitcoin. And I'm going to tell you right now, even though I've been familiar with Bitcoin for a very long time, I wouldn't consider myself an expert in this crypto field in any capacity.
Right.
And my familiarity with it, notwithstanding, I learned things here, Em. As a veteran to the markets, I learned things about the Bitcoin miners and the definitions that they use. And, I was like, whoa, 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 whoa. What's a hash rate again? Oh, okay. That's a hash rate. All right, now I understand. Oh, Bitcoin halving? Yeah, okay, we see how Bitcoin halving works. Some of the difficulties with it. And then he gets into some of the more investments, like Coinbase and micro strategies and, Tesla and Square. And I just felt he did such a wonderful job. And then we had the opportunity to come on the podcast yesterday, and as you can see, is right there. We had a chance to bring him on the podcast yesterday and talk about Bitcoin proxies, and just had a really, really, really wonderful time talking about Bitcoin and specifically Bitcoin proxies with Coach Mark.
That is awesome. I look forward to reading that newsletter and listening to the podcast later on today. So if you have not yet, I put the link in the chat. So go ahead and grab that link and make sure that you put that on your to-do list today. And
Well,
to that
and I
podcast.
and I really wish I would have posted that podcast at 2:30 in the morning so I could have said, look at the candle, look at the correlation. No, but no, we did post it right there. So, but no, you got to like the intraday response here from a technical perspective on Bitcoin firing off here during the European hours. You hesitate coming into that 64,000 trigger, and then what happens? You break out, reestablish, and now you're looking at a little bit of an intraday snapback. But so far, so good on that Bitcoin pullback. So far, so good on BITO. Gave us one day of doubt. That day was yesterday, actually. But nice little recovery here with that secondary confirmation on the underlying BTC. You gotta like the ability for Bitcoin to get back into those highs, and for BITO to come in and ding that first target at 43.
Great, perfect. All right, before we transition over to stock talk and talk about earnings and all things that are moving the market today and all the major stock news, Team Tackle, go ahead and give me a like and a share on our YouTube channel there. And if you are listening to us for the first time and you would like to give us a trial, I'm also going to put a link in the chat for you to try out our pro membership and see what we're all about. Matt, let's talk about earnings. What do you got for earnings today?
Well, I got no rock star names. I got no brand names out there. I got no Facebook, and I got no
Oh, man.
Google,
All
and I
the good
got
ones
no
gone already. All the good
Tesla.
ones
I
gone.
got I got I got I got no first round draft picks out there today. But I got players that win games for you. That's what
Okay.
I got.
All
That's
right.
what I got. I got the players that play second base. That's what I have.
That's
When you're looking at earnings today, let's start with public storage. Let's start with the hat tricks out there today. And we did have a few hat tricks here today. And for those of you that are new to tackle trading, our hat trick, when we track earnings, we track EPS, we track revenue, we track guidance. And a hat trick is a beat on EPS, a beat on revenue, and an increase in guidance. And we came into this earnings season with a couple expectations, and so far, they have passed the test so far. But those expectations were all about growth and all about the beats on EPS and revenue. Well, let's start with the real estate components here today of PSA as well as Simon Property Group. PSA comes out breaking out of an all-time high here today, dinging that all-time high. PSA 342 against 323. Revenue came in at 895 versus 845. Nice beat on EPS, nice beat on revenue. They also increased guidance. Markets got it right from a price response. That does look like a little bit of a gap and a little bit of a run. Triggering a little bit complicated with price movements like this, but 340, the high of today, really does stand out for any momentum type trigger here as it fights against that all-time high. When you're looking at SPG here today, SPG to me was the standout of earnings. Well, McKinnison was amazing here today, but SPG had a really good price response as well. Gap out, doji type scenario. Would love a little bit of a fading, close the gap, retest that breakout channel at 150 here. We'll see if the market gives us what we want here. It is coming in. Like, I went to Walmart on Halloween. I was offended because I went to buy some more candy. Candy was gone, man. It was still Halloween. Candy was gone. You know what was there? Christmas. Even Walmart knows Santa's coming to the stock market. So I'm just going to ask Santa to give me a little bit of a pullback, close that gap, and then let's rock and roll. Or a high base trigger above 160 makes a lot of sense. But the raw numbers here really stand out for Simon Property Group. 313 against 247. Revenue came in at 100 million above the expectation at 1.3 versus 1.2, and they did have the increase in guidance as well. Let's talk a little bit about McKinnison, where we talked about their numbers, their price response. The only thing I want to show you in response, and again, they came out with just really good numbers, covered them a little bit earlier in the halftime report, but you got to like multiple time frame breakouts here. You got to like multiple time frame breakouts. And a multiple time frame breakout is when you got a clear trigger on a daily chart, you got a clear trigger on the weekly chart. That is heavens and earths, and maybe not the stars, but they are starting to align, and you're looking at that as that 210 breakout there, looking at a little bit deeper time frame. Let's see what we can do here with that type of breakout, because McKinnison has some old history here. Look at the 210 breakout there. It's clinging onto 220, but this looks like it's just time away from 240 here, man. It's just time away. You got to like that breakout there. Nothing here left of the chart scares me until you get into that 230 by 240 area. This looks simple. If you're looking at a momentum trade on multiple time frames, you're triggering above the high of this candle, and you're driving that into T1 at 230 by T2 target of 240. So you got to like the hat trick pulled out of the healthcare space with McKinnison here today as well. We started with some good. We went on with some better. McKinnison was probably slightly better on the breakouts than SPG as well as public storage. Let's talk a little bit about some bad here, Emily. When you're looking at Mosaic, we talked about this yesterday. Listen, it's very simple. When you go up like this and your name isn't Tesla, you have to produce results. You have to produce results. I'm sorry, I had to. Tesla's just an index of its own right now. But you're looking at Mosaic. It had an amazing run up in the quarter, up over 25% in the quarter. And in the last month, these agriculture companies just went gangbuster. But you got to produce here. Mosaic just did not do that. And honestly, sometimes you wake up, you see a big red candle, and it's like, oh, what happened? Well, McKinnison missed. They missed, and then they missed some more after 25% price appreciation on the quarter. Markets got it right here. This is a gap down, sell down. Now it's a matter of looking how it behaves at that 50-day moving average. Could see a lot of scenarios on multiple time frames where this pullback gets gobbled up, but we got to see it first. The 50-day, it dinged that 50-day earlier today. That could be the low price for this type of drop, but you got to see the recovery happen, and that has to start on intraday analysis in the 30-minute chart. You're seeing a little bit of slowing momentum after that gap and rundown, but again, you need more evidence than this. You need a lot more evidence than this. give us a double bottom, give you a double top. But again, if you know it has that ability in it, I think we can be patient here as it navigates that support level. But once again, market does have it right on a miss and a miss coming out of Mosaic. Had a rash of earnings coming out in the energy space here today. This was a big week for the energy. BP, ConocoPhillips, FANG, you had Transocean with RIG, and then WMB. And a lot of boring here. I'll talk about BP. Now, there's a little bit of a technical gap down here on BP. Earnings report here was boring, just extremely boring. A little bit of a beat on EPS, a little bit of a miss on revenue. Again, you got to beat in many scenarios unless you increase guidance. BP did not do that. ConocoPhillips, I have not gotten what they said on the conference call, and why. And there's a reason I say that, Em. There's a reason I say that, because ConocoPhillips actually came in with a pretty decent earnings numbers. They came in at 177 versus 153. Revenue came in above the expectation at 10.6 versus, 11.6 versus the 10.7 in expectation. And think about this number for a second. Revenue increase year over year, a whopping 165%. Those are good numbers. Those are really good raw numbers coming out of ConocoPhillips. Why the conference call? Well, because when the conference call happened, everybody hated whatever they said. I want to know what they said. I want to know why they hated this earnings report so bad. And I want to know if they don't watch the Tackle Trading halftime report, because, guys, you're not supposed to mention supply chain crises in your earnings conference calls. That's a telltale sign. And so I'm looking forward to seeing what they said here, Em, because, again, the commentary coming out of Exxon last week, the commentary coming out of Chevron last week were both positive. Chevron record on their conference call, hey, guys, listen, we had a record free cash flow rate. And what does everybody do when you do that on the conference call? Fantastic job. Fantastic job. Do it again. We trust you. Do it again. ExxonMobil, you know what? Guys, we had a record quarter. It was amazing. You know what we're going to do? We're going to do a stock buyback program. We're going to reward you guys $10 billion. How's $10 billion sound? $10 billion sound okay? Fantastic. Fantastic. I just want my percent of $10 billion, right? Yeah. So I want to see what they do on the conference call here. Obviously, something was said. Let's check it out. But until we do, that looks like a little bit of a sell as you're breaking support. You're breaking the 20-day moving average. You're violating horizontal support here. A little bit of a shift in trend, not just a shift in momentum, but a little bit of a shift in trend for ConocoPhillips, and that is slightly concerning. What is not concerning, though, is FANG here. Diamondback Energy. You got to like the high base scenario, a little bit of a neutral base pattern coming into earnings. Now you're fighting a breakout channel. That could get interesting above that breakout channel. We'll talk about that here in a second. But FANG's a standout here today for a couple reasons. Number one, they beat EPS, came in 294 versus 281. Revenue came in at 1.9 versus 1.5 billion, and that that revenue was very similar to Conoco's 165% year-over-year increase in revenue. That's officially a very good report coming out of FANG. Looking at this on an intraday perspective, where's that breakout channel? You see the wickety-wick nonsense? That was the test above the breakout channel. It got fought back down. Now we're trying it again. Fool me once, fool me twice. We got to break out this time. That's my point. Well, when you're looking at that, look at that breakout right there at about 113.80 by 114. Confirmation above that level would mean confirmation on the daily chart. Taking that out to a little bit of a weekly chart. Look at the upward movement. Look at the 4 weeks of consolidation. Look at the breakout channel to the left of the chart here, guys. The time frame analysis is important because you start to identify the strength of that resistance level, the importance of that resistance level, and we all know the more important of a resistance level that is broken, typically we see a lot of price movement above those channels. So keep an eye on FANG. Whereas Conoco said something nasty, things like, well, we did just as good and we didn't say nasty things. Come to us. So that's what traders are doing. Come into FANG a little bit. RIG, another energy component here. Going to cover this one very quickly because there is not a lot to see here. RIG misses on EPS, misses on revenue. Oh, and by the way, Rig, also, and again, think about this. We just got talking about ConocoPhillips, which beat, and had a 165% increase in revenue year over year. Okay.
Uh-huh.
Let me give you, okay, so that's option one, right? Option one.
Okay.
Company A beat on EPS, beat on revenue, and revenue went up 165% year over year.
Mm-hmm.
Okay. Company B loses money, negative 19 cents, was worse than the expectation of negative 16 cents. Revenue misses as well by $30 million at 626 versus 654. And revenue went down 19% year over year. And all of this in the backdrop of last year, they restructured the entire company and it hasn't worked out so far.
Mm.
So, which one? Option A or option B?
I will take option A.
Me too. And that was ConocoPhillips, which we call the stay away. So, what do you think we're going to say about Transocean here? It's that's all I'm going to say. That's all I'm going to say. What can I say? I'm in a mood today.
Oh no.
But no, Rig's a cash flow. It can be a cash flow darling. It can go through wide ranges of neutrality, but it can also get blasted. It's just a
Sure.
matter of understanding what is happening in the energy. Energy's doing great. Rig's not. Let's not fight the trend there. Another standout, though. Okay, another standout in the energy space. I want you to keep an eye on this from a multiple time frame perspective as well. So you got a little bit of bad in Conoco and BP.
Mm-hmm.
You got some just nothingness in Transocean today, but you got a breakout in FANG that is happening on multiple time frames, and you
Mm-hmm.
got a pullback in Williams companies here. And so you've got some options as a trader post earnings this week in the energy if you're not looking at the Chevrons and the Exxons, but you're looking at a little bit of a FANG momentum breakout or Williams company here. And Williams came out with a beat and a beat here. In fact, from a raw numbers perspective, a raw earnings report perspective, I'm going to say out of the five that reported here today between BP, ConocoPhillips, FANG, Transocean, and Williams Company had the best raw numbers. It came in at 34 cents versus the 28, so officially a beat on EPS. Revenue came in at 2.5 billion versus 2.1 billion. That's a $400 million beat on revenue, and that increased about 28% year over year. They weren't done there though. Out of all these companies, only Williams provides guidance, and they increased their they slightly. It was slight, but they did officially slightly increase the guidance as well. Now you're looking at this from a technical perspective saying, okay, we're past earnings here. We're looking at this as a bullish retracement against the backdrop of a bullish uptrend. I know not everybody preaches at the altar of Fibonacci's, but I still like using Fibonacci retracement analysis to help me understand the strength of support. And to me, you're looking at a 38% retracement against the previous movement. That's typically a buyer's type zone. And now you're looking at, okay, well, if the analysis of trend and pattern is good, we're now post earnings on a positive earnings beat. Where's that potential trigger? Well, the intraday price levels is kind of showing us where those sellers came in. And where did those sellers come in? They came in here slightly south of $29, which was an old resistance level. Had a lot of chop over here as well. So it looks to me like if you like the weekly snapback retest of, and again, look at that retest. Look at that old resistance, new support. If you like that snapback weekly test and you like the daily price action, that is starting to turn over, it seems to me like simple confirmation on the weekly chart is above 29 here. And so when you're looking at this, I like Williams here above 29. It's my favorite one out of the energy responses, including the FANG breakout. But again, I'm usually a little partial to retracements over breakouts. And don't get me wrong, I love breakouts. Breakouts are the best momentum pattern you can get out there. But I kind of get geeked out on reward to risk ratio sometimes, and you can't get a better reward to risk ratio from a technical perspective than a traditional bullish retracement. A traditional bullish retracement is absolutely the best reward to risk. It just doesn't have the probability edge that, say, a breakout has, but you more than make up for that with the additional potential return.
All right. Well, is that all for our earnings?
I got seven others, but yeah, that's it for me today. The only others we had DuPont, and again I'll just kind of rapid fire here. DuPont had a few specialty chemicals report this week. DuPont was one of them. DuPont is absolutely firing off here today, but it's not just earnings, Emily. You're really talking about they announced the acquisition of ROG for 5.2 billion. So from a raw numbers perspective, they were fine. They were fine. They came in above the expectation on EPS and revenue. They had a slight decrease in guidance, but this is all about the market celebrating a merger and an acquisition here. And it makes me want to look into it, honestly. It makes me want to look into it. And the reason I say that is typically when you see, because I don't see this as an earnings beat and an earnings type performance. You had a decent beat on EPS, but you had a decent beat on revenue, but you decreased guidance. That has always driven stocks down in this earnings season. That's the one thing you can't do is decrease guidance in this earnings season. If you got to start with a beat and a beat, if you miss guidance, it doesn't even matter if you beat and beat. Typically, that forward guidance is going to play a bigger role than what you did in the past right now. And so when you're looking at this price response, this got to be the market celebrating a little bit of the merger and acquisition here. At least that's kind of what my read is. I want to go dive into that to make sure that read is accurate, because typically you see a market that does not behave this way on mergers and acquisitions. It's the company that is getting acquired that usually does this type of thing. And they acquired for over 30% over market value. Market still loves it for DuPont. Makes me interested. So I'll dive into and maybe have something for the community a little bit tomorrow. But the last ones, just very quickly, you had a couple industrial components. Rockwell comes out and just absolutely does great things with the breakout on multiple time frames. Keep an eye on that, because not only did they beat EPS, they also increased guidance here. You're seeing that gap out and a little bit of a doji. One thing I can't remember. I think it wasn't McKinnison. It was the other gap out, but looking for that, a little bit of stabilization, a little bit of secondary pattern developing here on Rockwell. That kind of was the standout of the industrial components. A little bit more of a brand name comments, a little concerning out of their report here today. Raw numbers were a miss and in line with revenue, but they also decreased guidance. So mark a little bit of a fade down on Cummins' report. Understandable. But again, when it comes to the industrial components, you're talking about Rockwell's report today, and you're talking about Eaton Corporation as well. Both machinery companies, both firing off here today, both breaking out here today. Now we're just waiting on that industrial breakout as well. But that is earnings roundup here for today. Go, Jeff.
Great stuff. All right, one more thing on the news today before we get on to Queen's Court and then wrap up the show. Your boy back out tweeting again. I thought we talked about this. We talked about this already.
Yeah.
Take away the account.
Listen.
So Elon Musk tweets yesterday that they haven't signed the contract with Hertz yet, after Hertz announced last week that they, that Tesla's going to be obviously giving them more, they will be putting 100,000 Tesla vehicles on their fleet.
Yeah.
So what is going on?
Listen, I'm not going to psychoanalyze the Elon Musk mindset at 2 o'clock in the morning. I'm fairly certain it's not one of sanity and clarity at that point. I know myself at 2 o'clock in the morning was not exactly. People shouldn't be tweeting at that point. Now, I don't even know when he sent the tweet. I'm just saying nobody should get into the psychological nature of Elon Musk tweets, because if all of us tell Elon to stop tweeting, he's just going to tweet. Remember, the SEC fined him $20 million for tweeting, and he tweeted that day. The day he got fined $20 million, he's like, so what? Like, hit me with a bigger stick next time. But what was interesting, what was in the tweet about the Hertz deal, remember, the Hertz announcement has added about $300 billion in market cap to Tesla. The Hertz deal is a $4.5 billion deal. It has added $300 billion of market cap value to Tesla since the announcement of the deal. Elon tweets yesterday, we don't have a signed deal. Okay. Okay. Hertz comes back out today and says, but why have you been delivering us vehicles then? And this is the world of Tesla and Elon Musk.
Oh man.
And it was just amazing. Market gaps down, and then everybody's like, wait,
What?
they've been delivering vehicles? Oh, we're good. We're good. We're good. Back, the hit parade back on. But no, just I thought it was a funny story. I laughed and laughed when I was reading that. I could just see Elon just laughing, cackling at Hertz having to come out and say that. But it does look like the deal is done. It does look like Tesla is delivering vehicles, and so for anybody that had a little concern of Elon saying we don't have a deal, they might not have a deal, but maybe old school handshake, wink, wink, $4.5 billion deal. Just another day at the office for Elon Musk.
Oh man, oh man. Yeah, I think it's just a funny story to just kind of laugh again. It's been a while since he's done, those tweets or whatever. So interesting. Well, I don't have anything else in news roundup unless you do. If not, we can get into Queen's Court and then wrap up the
You know,
show, talk about our programming.
honestly, tonight we have a little bit of Activision, we have a little bit of Amgen, but it's just a little bit of a lot of stocks this week from an earnings perspective. And again, last week was really kind of the big week in earnings. We're getting done with earnings season, and it's been a very, very healthy earnings season so far. And now we're through 65% of companies that have been reporting by the end of this week. That number is going to be north of 75%. We're basically done with earnings outside of components that we'll cover every now and then. But I just wanted to say thank you to our community for like hanging out with us during earnings season and taking in the information that we provide during earnings season. I know it's a
Absolutely.
lot of information that I provide on a daily basis during earnings season, so.
And we certainly appreciate you going in and digging and getting all those numbers for us because I could not do that on a daily basis. So we certainly appreciate you getting us those.
Oh, I'm a little weirded out at all the numbers I've been reading the last couple days. So,
But
but
you
I
know
find
what?
them fascinating.
You're going to get a break and then you're going to turn around and then you're going to wake up again and it's going to be another round of earnings season. So,
Listen,
it's
as long as Santa comes to town, I don't care what happens in January. We'll talk about that in January. It's
we'll
kind
talk
of like
about that in
interest rate
January.
policy next year. We'll talk about
Uh,
that next year.
we'll talk about that next year. Well, let's talk
What do
about
you got for Queen's Court, though, Em?
all right. So when I'm going through my daily routine and again, it's earnings season, right? So sometimes that will kind of throw you off in terms of what you can trade, what sectors you can look at. And I was going through my daily routine today and I just kind of came across a trade that I want to put on, but I want to get your, kind of like your feedback on whether I should or should not, or if I should go look for something else in another sector. But I definitely
Okay,
love this
so let me
trade.
dial this in then. Okay, so my job today as the advisor to the Queen
Yes, again,
is
because I don't have
is
Tim to chop off today again. So you
yeah,
gotta
we're still gonna kill him. Like somehow, some way, his head is getting chopped off today.
get chopped off.
Uh, it's like my daughter's Roblox streak. She logs into Roblox simply to keep the streak alive. We cut Tim's head off just simply to keep the streak alive at this point. So my job is to advise you as you are basically navigating us through your decision making process in finding a trade and whether that fits with what you're trying to accomplish. And my job as your advisor is to be like, yo, M, let's go.
Yep.
Let's go. Or like,
They're like,
we need to go back to the drawing board on this one a little bit. Okay,
exactly.
I listen. I told Tim this last night. My favorite role in life is not to be the leader, but to be the guy that's in the ear of the leader. I just want a puppet master. That's my favorite role in life is puppet master. So I'll do some puppet mastering here today. I like it.
Well, I appreciate it. Well, if you could let me share my screen so that you can kind of see what
Absolutely.
I am sharing here. Thank you very much. So kind of going through what we just did just now in the halftime report, we're just kind of going through our top-down market analysis, and part of that, and this is what we do obviously, with our reports over the weekend is coming up with your top-down market approach. Where do you see the market? What is your bias? So when you start to put all of these things together and you start with the overall market, well, what's the trend of the market? I think there's no argument in saying that the market is bullish, right? And so now you got to rank where it is. Like, where do you think it is on the bullish side of things? Is it a, a one, a plus, a plus one, a plus two, a plus three? Well, for me, my bias is somewhere in that range of plus one to plus two. That's kind of like where I am right now with the market. We're hitting
Yeah.
all-time highs, and that's just kind of like where I am. So my thought process is now I've got to go look for things that are in that, in that same trend, right? That same trend. But before I even go looking for that, I already kind of know in my head what patterns I'm going to go look for. We kind of talked about this earlier. You're talking about, the high base versus the retracement. I typically will look for high base breakouts or cup and handles. That's just kind of like what my eyes always gravitate to when I'm going through charts. So I don't want to overcomplicate things. We've got a gazillion things that we can pick from. So I'm not going to go looking for patterns that I'm not, comfortable with or don't particularly like trading, like, those ascending triangles or whatever the case might be. My go-tos on the market is at all-time highs is going to be those breakouts or retracements. I'm going to keep it that simple, right? So going through that, I then have to go look at my portfolio and see what I currently have, which sectors am I currently exposed to, and so on and so forth. So you're looking here, we've got some, we've got one energy, materials, we've got, some consumer discretionary, we've got healthcare, financials. So I'm pretty much well diversified, but I could add some exposure here or there, or maybe perhaps take a little bit out, whatever the case might be. But I still have to go through my daily process and go find stocks to trade, right?
Yeah.
So I'm going through this, and I still really love that consumer discretionary area of the market, right? It's just just been doing well over time. If we kind of quickly go through all the different sectors that we have here, and you guys talked about this yesterday with when you do your sector roundups, but we've got basic materials, breaking out there at 85, right? You've got communications, not the prettiest one that you can look at, right? And you go down the list here, we've got energy, we've talked about it, energy. Financials looking great. Bank of America's, just always just a very, very good trade of mine. I definitely love financials. We've got industrials looking to break out. So there's so many things that you can find. Look at technology, look at staples. Real estate is just, inching to break out there at 49. And then you've got utilities. You've got, your healthcare, and you've got your discretionary, right? So we're looking at this, and I really love this space in discretionary. So I'm going through my my watch list, and what I typically will do is I have a watch list that has everything broken down by the sectors. So I just kind of go through and glance and find whatever I can pick. So I was going through that, and I found this little darling here in Lowe's. It's the pattern that I'm looking for. High base breakout. I can identify where that resistance level is. I can identify where support will be for my stop loss. Easy trigger, once it breaks 235.90 or 236 zone right there, if you use your ATR rules, 10% above the high, all those things, right? So it's just an easy thing for me. You can see how I was just kind of sideways channeling here, and then we had that breakout, and we've had this run, and now we're kind of slowing down, letting the 9 EMA catch up to those candles. We've got a perfect area of support zone, significant whole number there at 230. It's just easy for me, right? I can just look at this and just go, I love this. So if my bias in the market is a +1 to +2, then I got to put together which strategy I'm gonna apply, right? Because I want to also make sure that my strategy matches where my bias is. And then also looking at, at implied volatility. Are options cheap? Are they expensive? Should I go cash flow? Should I go delta? So with Lowe's here, being that I am, at a +1 in the market, my brain already tells me we're going to go bull call, right? I'm not going to go long call. It's fairly expensive stock. So I'm not going to go, the direction of just buy a long call. I'm going to do a bull call. Now it comes to a matter of, which of these expressions am I going to look at? I'm looking at the December, or we can go a little bit further out and look at the January. Okay. It's just going to be all a matter of cost. Now, I would love to have something that's like in that 60-day range here, but we don't have that. We've got 45 and we've got 80. Yeah.
As your advisor, would you like me to hold my commentary till you're done, or as you're going through this selection process, would you like me to
add, please?
Okay. And I just wanted to make sure, because again, when we're talking about the bull call, once the strategy is selected, The first thing you have to decide is time frame,
Yep.
right? You've said I want some bullish delta, right?
Mm-hmm.
I want some bullish delta. I have enough in energy. I have enough in finance. I know the conversations you and I have all the time, and I know the conversations we've had on Queen's Court for a very long time. And you don't need more energy. You don't need more finance. I think you own half of Bank of America at this point, and so you don't need that. What you need is you want to take advantage of some of the momentum that has been playing out in discretionary, and it's kind of left you behind a little bit because your focus was on finance, energy, healthcare, those things, and they've done really, really well, but so has discretionary. And so
Yep.
now you said, I want some discretionary. I don't have access to it in my portfolio. I'm going through my watch list. I found lows. I want to match my strategy to my bias in the marketplace. You could match it to your bias in lows, though. And so,
Mm.
for example, and what I mean by that is when you're looking at your bias to the market, your bias to the market has to be, and it's right in line with the tackle bias to the market. Obviously, you're
Mm-hmm.
going off the newsletter there. We're ranked right there at 20, which is right in that combination +1, +2 territory. But
Right.
that's really for your portfolio delta. And that's going to be an important question I have is what is that portfolio delta, and does your portfolio delta match your market bias to a certain extent?
Mm-hmm.
But in lows, this is an increasing momentum condition where you're analyzing it as a high base, which is a breakout trade, which is a momentum based pattern, and you have earnings coming up in about 17 days from now, which
Mm-hmm.
means you have a tight window that you're fitting within that time frame before earnings, which means I don't mind the bull call side of the equation here, especially with elevated volatility. I don't have any issue with that. You could go straight call if you're taking the directional one, but I do like the bull call because elevated volatility. The
Mm-hmm.
question is time frame, though,
Yep.
right?
Yep.
In this time frame, you're debating internally December versus January. Typically speaking, I would say let's rock January. We're 80 days out. We have plenty of time there.
Mm-hmm.
Theta's not going to be that big of a concern. You're perfectly fine there. But we're trying to fit this within a very tight window in front of earnings, right?
Yep.
And so I do feel like we can go down to a lower time frame. We're not going to be carrying through that ultimate last 30 days, which is where the real theta starts to really start to kill that trade. But remember, you're in a spread here. You're already mitigating theta to a certain extent with the call option you're buying. It's got a
Yep.
theta right around 9. With the call option you're selling, it's probably going to be somewhere around the 3 or 4 range. You're already offsetting the theta. That's mitigating simply by doing the spread. And so I kind of like working in that 45 days, knowing full well you're not holding a bull call spread through earnings.
That's true. All right. So you've helped me eliminate that. So when it comes to now which strikes we're going to buy and sell, I'm going to go the at the money at 230. And then I'm going to make it a 20 wide because I'm going to try to get that delta as closest to 25 as possible. But so I'm going to go with the 230, 250.
So
And
so basically you're and again to go on my theta,
mm-hmm.
you're losing 9 cents a day. You're
Yep.
capturing 7 cents a day. So
Mm-hmm.
you're already mitigating that theta. So I like that spread. I like that spread, and you're right in line with kind of where that rule at tackle trading is on a bull call. You want that net delta around 0.25. I like the general makeup of the trade so far.
So now that's going to get me out of pocket at about 774. And when I put this on the risk graph, and let me take out these other ones that we had on here. So we're looking at this one right here. We can take this out and take that one out. So here's the risk graph. And once again, it's a high base breakout. So I'm anticipating that breakout above that 236 zone. I'm profitable as long as it's anywhere inside of this here. And again, being out by earnings, which is November 17th.
17th or 18th.
17th, yeah,
17th.
November 17th. So earnings before the 17th. That is kind of like what I am contemplating. Or should I just say, you know what, forget it, go find something else, go back to the drawing board and start all over again. But this is kind of like where I'm just itching to just stay in consumer discretionary this week for my trade of the week.
Well, in consumer discretionary, there's a lot of elevated price action in consumer discretionary given the backdrop of what's been happening in discretionary. So there's a lot of stocks that may set up in a week to 2 weeks, given the fact that
Mhm.
they need to kind of reestablish triggering and so on and so forth. But when you're looking at lows, you got a nice high base consolidation. The 9 EMA is just caught up to it. Your trigger is above the breakout channel. You're playing right in front of earnings, which means you're going to be looking at a short-term swing trade. You're being as conservative as you can. The question that I have, because I don't have a problem with I have no issue with the stock. The only question I have is Home Depot or Lowe's, right? Like
Oh.
that's a question I have. Home Depot looks like a little bit of a height base flag based pattern that's finding the 9 EMA. You're looking at Lowe's as more of a breakout channel at this point. Lowe's
Yep.
looks they both it kind of feels like if one works, both works type
Mhm.
scenario since they are trending very closely to one another. But with Lowe's is at that breakout channel a little tighter than Home Depot is. And so
Mhm.
Lowe's most likely will trigger in front of Home Depot here,
Mhm.
which means Home Depot will probably be lagging the price movement on Lowe's. So I do like Lowe's a little bit more today. I would have had a different opinion on Friday last week though. That little bit of a move down broke that high base scenario, and now you're looking at a little bit of a combination of flag. Still bullish, still a bullish pattern, but you just got to recover that intraday analysis a little bit. So I do like Lowe's here a little bit. It's sixes though when we're talking Lowe's versus Home Depot. I like you trying to take advantage of the directional movement that's been happening in discretionary, although that could be slowing down just a little bit as we're at elevated price thresholds as well. The
Mhm.
question I have really goes to the original premise here, Em. When you first started off saying my bias in the market is that +1 to +2 territory, and so ultimately, the first question I have isn't what you need, it's whether or not your portfolio needs that. Because if
Mhm.
your bias, if your portfolio is not matching your bias, you might have other things to do before that. So if you'll take me to the monitor tab very quickly,
Uh-huh.
we're gonna do some things here. And if you'll go ahead and beta weight that, please.
Sure can.
Find me your net delta, M, if you can do that for me. Go to that old layout. Let's see if we can add up that net delta here. Do me a
I
favor, just if you
something.
don't mind, just kill Airbnb and kill
Okay.
Tesla. They're in simulate
Okay.
trading. Sometimes the delta numbers get just absolutely off a little bit, so we're gonna fix that up to show the. And I believe we have one more. No, we
Okay.
got a delta number. We got a delta number. Okay, so that delta number you have is, and again, the spider trade is kind of offsetting it, but you can kind of take the general principle here. Right
Mm-hmm.
now, you have a delta in your portfolios weighted against the spiders at 276. Now, that tells absolutely nobody nothing. Not
Mm-hmm.
one thing. It tells absolutely nobody anything. But it tells me something very important here, Emily. And if you'll go ahead and let me share the screen very quickly here, I'm going to share a trade journal out of Tackle Trading, and it's called the Portfolio Trade Journal. And if you look at the portfolio journal over here, you can kind of fill out the trades and track your portfolio over time. But the
Mm-hmm.
concept I want to kind of analyze here is what's called delta weighting. And what delta weighting is basically mathematically looking at your portfolio's weight in comparison to what you have determined as your market bias. So let's say you have $100,000 in the account. Yeah.
Mm-hmm.
Okay. Well, when you tell me you want your market bias is +1 to +2, that tells me where that delta needs to be in line with. And so
Mm-hmm.
if I were to look at your portfolio and you have what, a 273, was it? What was the delta number?
276. Yep. Two
276.
seventy. Yep.
So we'll just call it 275. So right now you have a delta of 275. So right now, based on what you just showed me, your portfolio that we just looked at has a delta of 275. What that tells me is your bias in your portfolio is actually underrepresented. Your bullish trades are underrepresented in your
Mm-hmm.
portfolio. Your portfolio is actually neutral to slightly bullish here. You have a slightly bullish lean. Now, obviously, that's a virtual portfolio, not your real portfolio, but you
Mm-hmm.
get the concept here.
Yep.
Your portfolio delta is not matching your market bias. What that actually tells me is you need more than just lows.
I
You
go
need a
long.
couple. You need a couple other bullish trades out there. You need to get a little bit more aggressive. We might want to reassess mitigating your theta number and open up that low straight a little bit more and go straight call options here. But so in terms of answering the question as your advisor, I would say a couple things. Number one, as we're making sure that Lowe's fits exactly with what you're trying to do, the analysis on Lowe's is spot on. You're looking at a breakout. You're wrapping a conservative option strategy called the bull call spread onto that breakout. You're fitting it within a tight window. You know full well going into the trade where my entry is upon the breakout, where my stop loss is. I got an option strategy that is conservative by nature. All of that is fantastic. But again, I come back to that original premise. Does your portfolio even need a bullish trade? And
Mm-hmm.
based on what your portfolio delta is, based on what your market delta is, you need not just one bullish trade.
You
We
need
need
more.
we need we need to pick up the bullishness a little bit. We need to get some of those covered calls working. We need to get some of those directional. And again, we're looking at a virtual trader there.
Yep.
But again, the concept maintains. When you're asking yourself, this happens all the time as traders. We find a trade and we're like, oh, that's the best trade. That's the best trade. Let's go do it, right?
Uh-huh.
Well, again, ask yourself a question. Does your portfolio need it? And
That's,
the
yep.
answering of that question is all about market bias versus portfolio bias. And right now, your portfolio is telling you, M,
It
I,
needs
I
need
want more. I want more delta. I want more bull delta. Give me that positive delta. So yes, the trade strategy is fantastic. Your portfolio is actually in need of some bullish delta, and so hats off, A plus, well done.
Well, I know exactly where I'm going to go find some bullish trades. If you want to go back and give me a chart read, let's take a look at a couple of the ones that we had on our options report this past weekend. So hopefully you guys had a chance to look at them. That Goldman Sachs not looking too shabby. We've got Costco. We've got my pick of the week.
Can we just stay here though for a second? just Can we just stay on Goldman just for a second here? I
Get a
took my
cup of
video down for
coffee
a
and
sec.
stare at it.
Just yeah, I'll have some tea.
So beautiful.
Enjoy.
So beautiful.
Look at that breakout. You better not fake out Goldman Sachs. Warning, Goldman.
Don't you dare be a fake out. I'm gonna come and get you.
Don't you double this up.
I'm gonna cut you.
Don't you ruin this for us. You got to like this on multiple time frames, though. You're looking at a breakout on the weekly channel after hesitation. You got to like that. You look at the daily chart, really hugging that 90 MA, and it just pounded the table here on the cash open. So a nice little breakout in Goldman Sachs, no doubt about it.
Also, let's take a look at Costco.
Costco, a little momentum breakout against the high base. 90 MA did not even catch up, and that's like, so what? You said we were going to 500. Let's go to 500. So they did it.
Exactly. Crocs.
Oh my goodness. Oh my goodness. Beautiful breakout from yesterday. A little hesitation, but I won't worry too much about this. Remember, in the path to upward movement in price, there are days where it dojis. There are days where it goes down. Look at Bitcoin earlier, just yesterday. Little bit
Mhm.
of a downward movement in price. Support never broke out. Back up. And so a little bit overextended on the breakout. Wouldn't surprise me to see a little consolidation, but this is a multiple time breakout. You're giving it a little bit of room to breathe here, and so you really don't care if you see a little bit of up and down nature here on a Tuesday.
And last but not least, BBWI, Bath and
You want to scoreboard. I get it. Go ahead and scoreboard. This is
Bath.
fantastic flag.
Was that my pick? I'm sorry, I can't remember. Was
Wait
my
a
pick on
second.
Friday?
Was it your pick?
Was it
Was
my pick? I
I
think it was. Could
I
it?
think it was your
It
pick,
was.
actually. I do. BBWI, Bath and Body Works, Flag got gobbled up last Friday, confirmed on Monday yesterday. Now looking at that secondary trigger, and the traders always ask themselves the question, did I miss it? Did I miss it? And the question is, yeah, you did. You missed the retracement. You did. It's gone.
Guess
That
what?
got triggered yesterday. But now you got the breakout. And let's look at that breakout channel here. That is a multiple time breakout. You got old resistance over there as well. Left of the chart, you break out of 72.70, it gets cleaned up real good up into that 77.5 range. And so if you miss the breakout, show a little patience. Excuse me, if you miss the
Mr. Retracement.
retracement, show a little patience. That breakout will establish itself. So BBWI, so far so good there, Coach.
Well, that is all we have for you today on this edition of the Halftime Report over here at Taco Trading's YouTube. If you like what you see, give us a like and a share. If you don't like what you see, still give us a like and a share. Hopefully you'll find something that you love there. Programming notes for tonight. Today is Tuesday, so you know what time it is. I've got my trading lab tonight at 7 o'clock Eastern. And then right after that, we've got the coaches show at 8:30 p.m. Eastern. So make sure you guys are ready for your evening sessions of all things that we do here at Tackle Trading. And other than that, we've got what else going on this week? We've got the FOMC meeting this week, and we'll talk about that tomorrow. But that's all we've got for you this week. And unless you want to add any final thoughts there today, Matt.
No, thank you so much, Em, for coming on and hanging out with me in the halftime report. And great job in Queens Court. Really appreciate that. You're doing an absolutely amazing job, and love the Lowe's pick. But I kind of like your BBWI pick a little bit more as well. That looks very clean above that resistance channel. Well done on that. Coaches show later on tonight, flagship program Attack Train Coaches show. Definitely check that out. And if you have not accessed the Tackle Trade Discord channel for you pro members, make sure you do that. Discord's we're trying to get Discord popping over there a little bit as I maintain the mastermind group for the STEP system, which is all about swing trading, short-term analysis, technical analysis. You can hit me up over there at Coach Matt on Discord and hit me up with any questions. Coach Tim's in the coaching mastermind channel over there on Discord. Queen M, you have the one of your trading labs over there, as well as Coach Mark and Coach Tyler, and we'll be doing more in Discord. So if you need access to the Discord link, you can always email team at Tackle Trading Pro members. But you also can get access to the Tackle Trading Discord link in any of our reports over the weekend, on the options report, the stock report, or the Tackle Trading newsletter as well. So if you have any questions throughout the trading day or in general, hit any of us up over there on the Tackle Trading Discord channel.
Awesome. Well, I think we are done for the day. We will catch you guys tomorrow. Same. What does Tim say when he takes us out? Same time, same channel. See you guys
Same
tomorrow.
time, same channel, and I just say I'm out.